And I'm reminded anytime you hear someone who talks about a financial project and a church position in the same sentence, run as fast as you can. Again, just because someone is a bishop or a stake president or an elders quorum president doesn't mean that they
know everything about investing.
Yeah, investing. So it's important. Let's talk about where we are. What have we done so far? We talked about building a foundation. We talked about how to apply the principles of successful investing. You notice as we continue down these steps, we've done that. We've tried to do that. We talked about asset classes. Then we talked about investment vehicles. And then you had to finish off with what makes a good mutual fund. So what are we going to do today? Today we're going to determine your risk tolerance. We'll take a risk tolerance test in class.
Right now.
And we'll use that to set your asset allocation and also your expected return for your portfolio. So that's what we will be doing today. So can you tell me what is risk tolerance? It's a measure of your willingness to accept risk. And there can be lots of different types of risk.
She's okay. She's got a plug.
Yeah. So the purpose is to help you determine an appropriate asset allocation or investment mix based on your willingness to accept risk. So is it a general category or an absolute number? In our case, it's a general category. We've divided into, can I get a marker? Mm-hmm. 5 categories: very conservative,
Seven.
Moderate, aggressive, and very aggressive. You guys can tell me once. If you think you're a very conservative investor, raise your hand. Okay? How about a conservative investor? Keep them high so I can count. 1, 2, 3, 4. How about moderate? Aggressive? Very aggressive. Okay, interesting. So lots of different ways to select your portfolio, but managing risk is appropriate to all of them. So how do you determine risk tolerance? Really, there's 2 ways of doing it. Number 1, it can be an implied risk tolerance. You tell me your age, you tell me what's in your portfolio, and I'll tell you what kind of a risk
taker you are.
Yeah, what your risk level is. In our case, we have a lot more in equities and a lot more in bonds than someone with a 70-year-old. So we are probably moderate to aggressive, a little bit. And we've actually changed over time. Or you can estimate it by having potential investors take a risk tolerance test. We'll ask you questions about age, about spending habits, about other things there too. And from that, we can come up with an estimated risk tolerance. And then once we have our estimated risk tolerance, we can use that to determine our asset allocation. So what we're going to do today is we're going to do a risk tolerance test. I need everyone to download Tool 18. So each question has 5 potential responses. It'll be worth 1 to 5 points. At the end, you're going to add up the points for all of that. And from our total points, you can determine what your level of risk is. Okay, what is your age currently? What's the impact of age?
Yeah.
What's the impact of age on investing?
Yeah, that's it.
Does age have an impact?
Right now.
Yeah. Time horizon. Let's assume you had some money. Right now, most of you are investing in yourself. But if you had money, what would be the time horizon for the money? So what's the impact of time horizon on money? If you were saving for retirement, would you be willing to take on more risk or less risk? More risk. Your time horizon will have an impact how much risk you take. If your view is retirement, you can take a lot more risk. If your view is, hey, we're going to need the money for a down payment on a home next year, you'll probably take less risk. But what we're trying to show you is there's a lot more things that go into asset allocation than just numbers. Investment goals, what's your primary objective for this money? Is it preservation of principal? That means you don't want to lose any money. Is it current income? Do you need money coming in? Is it growth in income? Do you want a little bit of growth and money coming in? Is it conservative growth? You'd like it to grow, or is it aggressive growth? Again, your investment goals has a significant impact. Your goals will, to a degree, drive your willingness to take on risk, and it'll make a big difference in where you invest.
Okay.
How about 4? Estimate expected personal earnings. Does the earnings you're going to have in the future, does that have an impact?
So do you expect your
So let's
earnings
talk
to
about earnings in the next
increase
3 to 5 years.
dramatically, about the same?
Do you expect your
Increase with
earnings to increase
inflation or
substantially? I hope
decrease
that's the case for all of you.
Decrease or increase? Yeah, so put a 5.
So isn't it interesting? If you think your earnings are going to decline in the future,
Yeah, say
you're
5.
probably a lot less willing to take on risk.
Yeah.
Risk.
Question 4, yeah.
If you think your earnings are going to increase, you're probably willing to take on a little bit more risk. Okay, question 5. Emergency fund. How big's your emergency fund? It doesn't, you have done 3 months expenses, 6 months. So the size of your emergency fund has an impact. If you're going to need this money
Okay, now go back.
in a week, you're not going to be willing to take hardly any
You're doing good.
risk at all. If you don't have an emergency fund, but if you do have an emergency fund, you're much more willing to take on more risk. What does it also tell you? Generally, with your first investments, you take on a little risk. After your asset size and your experience grows, you'll take on more. Okay.
Question 6.
What's your personal investment experience? Realize we only have 8 questions. We haven't once talked about returns yet.
So this is, I have never invested any money in any financial instrument. 2, I'm a relatively new investor, only a few years. 3, I have invested in IRAs and employer plans, but now I am ready to develop additional strategies outside of that plan. 4, I have invested for quite some time and am fairly confident in my investment decisions. And 5, I have invested money for years and have a definite knowledge of how financial markets work.
Okay, so pick one, which one it is.
Pick one. 6. That's question 6. Okay.
So generally, the more experience you have with financial markets, the more risk you're willing to bear. This changes, though, too. When Sister Sudwicks and I first got married, she was very conservative. And I would say over the years, she's actually moved up to conservative, and now she's probably close to moderate.
Yeah, definitely.
Okay, question 7. Regarding your view of risk, which investment would you be more comfortable making?
So do you want to be in mostly savings accounts and CDs, or do you want to be in savings accounts, CDs, and income-producing bonds and bond mutual funds? Or I've invested in a broad array of stock and bond mutual funds, but only the highest quality, and I've invested primarily in growth stocks and mutual funds, and I like to pick new and emerging growth companies and funds.
Okay. So what you own now could be an indicator of your risk level. If you've only invested in CDs or safe investments, you're likely fairly conservative.
That would be me.
If you're aggressive stocks funds, you're willing to take on more risk, which is me.
I'm getting more aggressive. I'm
Yeah.
going to maybe move next year.
Okay, here's the last question. Which of these investments would you be more comfortable making?
A 20-year average return of 0 to 1, with frequent downturns and no years of negative returns.
Never had a negative return.
Never have a negative return. Number 2, a 20-year average return of 2 to 3, mostly positive, but less than a year of negative returns. A 20-year average of 3 to 5, with a few downturns, but more than 1 year of negative, but no more of 1 year of negative returns. A 20-year average of 6 to 7, with several periods of negative, and a 20-year average of 8% or greater, with several periods of substantially negative returns.
So again, higher returns require higher risk. If you're comfortable with lower returns, you can position your portfolio. If you want higher returns and higher risk, you can invest according to your risk level. Someone asking the questions the other, well, how do I get high returns and low risk? That's hard. What's Metzley's risk tolerance? She is moderate. Let's go over here. Let's kind of see how you guys did versus this risk tolerance test. How many people came across were very conservative?
Nobody.
How many were conservative?
Nobody.
How many were moderate? Wow.
I'll
One,
count.
two,
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13.
Okay. How many were aggressive?
1, 2, 3, 4, 5, 6. Wait. 6, 7, 8.
And how many were very aggressive?
1, 2.
Okay. Interesting. But I actually like this because
Most people are moderate.
Yeah, most people are moderate, which is kind of what we would expect. But again, if you're too conservative, what does that do? When you get to retirement, you'll probably have saved less than you think you should have. If you're too aggressive, be careful.